Over the past 11 years, I was a reinsurance broker. I wanted to get a job in investment banking right out of college. I rode GameStop to the top. I nailed the trade. Sentiment broke when Robinhood turned the buy button off, and I needed to look for an alternative place to park capital. I was fascinated with MicroStrategy. This company converted 100% of their cash balance sheet into Bitcoin.
Yeah.
I quickly realized this is going to be the biggest company in the world. The traditional financial market is so much bigger, vastly larger than the Bitcoin market at the moment. If you're not adopting a Bitcoin treasury into the future, I think you're going to fail.
Your insights have been amazing, which is why you generate a lot of noise. Where'd you come from? Why is your viewpoint unique in this space?
I think the
Jeff Walton.
Yeah.
Let's talk about the most exciting thing going on in the Bitcoin space right now, which is sort of the talk of the town here at the Bitcoin conference, which is Bitcoin treasury companies. Before we dive in, I want to set the stage of what Bitcoin treasury companies are versus maybe just Bitcoin on the balance sheet. I want to talk about the froth in the market, potential risks in the market, where you see this market going. We have a lot of stuff to dig into. But before we do that, like, you're new in the space.
Yeah.
You've generated a lot of noise. Your insights have been amazing, which is why you generate a lot of noise. Where'd you come from?
Yeah.
And why is your viewpoint unique in this space?
Yeah, great question. So, over the past decade, actually 11 years, I was a reinsurance broker. So a little bit of my background. So in college, I studied business and economics. I had a focus on finance and a minor in math. So really interested in markets, economics, how the markets work, how things work together. I wanted to get a job in investment banking right out of college, and I ended up getting a job in reinsurance in Seattle. So I took it and I went that direction. And I ended up falling in love with reinsurance. It was super fascinating. I was able to, be very creative in structuring financial products.
Explain reinsurance for you.
Yeah. So reinsurance is insurance for insurance companies. So the point of reinsurance is insurance companies have all of these assets on their balance sheet, right? And they have a defined mathematical outcome on how much loss they think they have in any one individual year. Now, when you have a catastrophe like a hurricane or a wildfire that ruins your whole business model, basically, you don't want to be in a position where you have to sell your illiquid assets to pay out claims from a catastrophe.
Never be a forced seller.
Yeah, never be a forced seller. So insurance companies can purchase reinsurance to reduce the volatility on their balance sheet. So what that looks like is, you may have exposure to an earthquake or a hurricane or a wildfire. And we can, as a reinsurance broker, you slice up and tranche different layers of risk that we sell off into the reinsurance market. In the reinsurance market, there's 100 plus reinsurance companies, and on each one of these individual reinsurance deals, you may have anywhere from 5, 10, 50 reinsurers that are participating, just little slices of each. So it's diversifying the risk across the globe. Mm-hmm. So that background in reinsurance and risk assessment, volatility management, structured finance, and selling volatility has kind of been built into my DNA over the last decade. And that was one of the reasons I was really fascinated in Bitcoin. With my background in finance, I was seeing Bitcoin as a necessary addition to my portfolio from Markowitz modern portfolio theory. Markowitz modern portfolio theory is the addition of a new asset to your portfolio with different risk return metrics, increases the return and reduces the risk of your entire portfolio. So I was really fascinated with that. And, around 2020, I was, around COVID times, I was really getting orange pilled in the Bitcoin space and going really deep down the rabbit hole into Bitcoin. And around the same time, 2021, I participated in the GameStop trade, ended up liquidating my entire portfolio.
Oh, okay.
I bought GameStop shares. I rode GameStop to the top, ended up liquidating at the top. I nailed it. I nailed the trade. I game theoried my way through the entire dynamic of the trade, understanding who are the players in the market, what are the incentives in the market. Sentiment broke when Robinhood turned the buy button off. and I needed to look for an alternative place to park capital. At that point, I was fascinated with MicroStrategy and what Saylor was doing. I had watched tons of Saylor videos, and then I looked, it's like, oh my God, this company converted 100% of their cash balance sheet into Bitcoin.
Yeah.
This is the biggest story of all finance. And I quickly realized, like that day when I saw what MicroStrategy was doing, this is going to be the biggest company in the world. Right? There's nobody that's going to catch this company. They are so far ahead, and that story has just got compounded and gotten bigger and bigger.
Not without some volatility.
Not without volatility.
Yeah.
Not without a ton of volatility. So,
yeah, I love that. Okay, good job, good story. Sometimes we get lucky calling those tops, don't we?
Yeah.
I've had some of those. So in the insurance game, it's all about writing risk properly, right? Because if you don't write the risk properly, then you lose everything. You pay out the claims, you don't have the money for that.
Right.
So would you say that your sort of background in finding that risk in those balance sheets, digging through their assets, things like that, then sort of lends to looking at these types of companies today and trying to understand the risk models that they're going through?
Yeah, absolutely. And one thing that's really unique in seeing this new landscape of Bitcoin treasury companies is really trying to define risk, right? I mean, nobody's really seen this before, right? This is a new phenomenon with these companies that are adopting Bitcoin, and the risks aren't your typical risks of a corporation, right? You don't have physical risk, you don't have product liability risk, you don't have just traditional risks that you would see in a traditional corporation. So rethinking what is the framework of risk, right? And that's where I've been spending a lot of time the last couple of weeks, is really rethinking, okay, what is the risk to these Bitcoin treasury companies, and the ones that are particularly just focused on accumulating Bitcoin, and how do you manage it?
Yeah.
And so to me, when I'm thinking about developing a risk framework, I'm thinking about how is the balance sheet designed, which is very, very similar. I think there's a lot of correlation to a lot of similarities to what Bitcoin treasury companies are doing and insurance companies, because insurance companies are balance sheet companies. You're managing the volatility on your balance sheet.
Right.
That's the full way.
They're both capturing money. They have the float.
Yeah.
And then it's how do we leverage that balance sheet, the float, into more assets, right?
Exactly. Which I'm surprised there's not more insurance people here yet.
Yeah.
But yeah. So when you think about it from a Bitcoin treasury perspective, it all comes down to like structure, design of the balance sheet, volatility, how much leverage you're taking on, how many other people in the market can do what you do, liquidity in the marketplace, timing, and duration of your liabilities, and that it's evolving really fast, and people are trying to figure it out. And we've seen tons of new metrics come into the space, right? We've got, how quickly is your Bitcoin yield increasing? It kind of started with Bitcoin yield.
Yep.
Saylor and the MSTR team put out a bunch of really good metrics: Bitcoin yield, Bitcoin gain, or Bitcoin dollar gain, Bitcoin dollar income. And now we're seeing, the evolution of MNAV, or multiple net asset value, months to cover MNAV. And I think one element that the market is really missing is the risk element, risk adjusted metrics.
Yep.
We need risk adjusted metrics to compare some of these companies. What a lot of people are trying to do is compare, right? Like how do I compare one investment relative to another investment? And you look at one data point, and one investment may look incredibly lucrative.
Right.
But you may look at another data point or another framework, and it may look significantly less lucrative because of that different framework. So I think there's a lot that needs to develop into the marketplace, and I think this vision of risk needs to be overlaid on the entire market. And that's one of the things I'm kind of focused on.
Well, what's your background? And I couldn't agree with you more. That's something that I'm actually focused on as well. So I want to dig more into that, but let's go back a little bit and frame this up. So we have Bitcoin treasury companies, which I sort of call Bitcoin treasury strategy companies, versus companies that are putting Bitcoin on the balance sheet. Mm-hmm. You see those as different? And if so, why?
Yes, a little bit. see, you've got two companies. You've got like kind of a pure play Bitcoin accumulation company, which to me really seems like this seems like a moment in time opportunity for a very select small group of zombie companies that have the ability to do something like this. This is you've got a little bit of operational income or operational design on a balance sheet, and you're able to leverage the capital markets just given the euphoria that's happening in the capital market space right now.
And when you're talking about a zombie company, you're talking about sort of like strategy, MicroStrategy was in, where they have the software business, but it's sort of dead and it's not really worth reinvesting into. Or you have GameStop is a company that their business model is sort of dead, at least a dead man walking, but there's still revenues, there's still balance sheet stuff there. So is that what you're talking about, the zombie company?
Yeah, that's what I mean by a zombie company. Yeah, exactly. It's just, revenue and growth is stagnating or likely down. You're basically forced to make a decision and do something different, because if you don't, you die. Right. That's what I view as a zombie company. And a lot of these zombie companies that are adopting a Bitcoin treasury strategy, it's going to save them, right? It's going to save their company and their ability to access capital markets, increase more, like put volatility in your balance sheet, generate some liquidity. I mean, you've seen companies like Semler come out, and Semler Scientific, the stock had been, it was one of the most highest performing stocks from 2016 to 2020, and then it had gone down pretty significantly.
It's a healthcare stock.
It's a healthcare stock, and they were really struggling to generate interest in the stock. And then they announced that they were the second company to add Bitcoin to their treasury, and the stock, booms. It's like the biggest marketing tool in the market right now. Is to just add Bitcoin to your treasury, and you're going to get liquidity.
Right. But do you think the market anticipates, and the way that I'm sort of looking at it is like putting Bitcoin on your balance sheet, meh. Meaning, like, of course, companies have money in the bank, right? Of course, they have a treasury. And what is that parked in? Treasury bonds and equities. Like, what do I care, right? And if some of it goes into Bitcoin, like, man, so what, right?
Yep.
Versus a treasury strategy company, which is like, okay, no, we're going to try to...
Oh, this is our treasury.
And we're going to try to grow the Bitcoin per share.
Yep.
We're going to by tapping into capital markets. And that's sort of like a new business model, because it's like strategy used to be a software company.
Right.
They're not a software company anymore.
Yeah.
The product now is MSTR or STRK or STRF. So now they provide financial products.
Right.
So the business model changed. And with GameStop, the reason why these zombie companies are dead men walking is because their business models are dying.
Right.
So if GameStop adopted a Bitcoin treasury strategy, they would become the next financial product. Maybe like an ETF. It's like hard to kind of compare these things.
Right.
Versus a company like Apple putting it on their balance sheet.
Right.
That's kind of what the distinction I see. And so similar, like, are they going to sort of shift their model and they'll become the next financial asset?
Yeah. It's a mindset shift, right? I think you nailed it, right? A company that's just adding Bitcoin on their balance sheet as a hedge is very different than a company that's actively seeking to add more Bitcoin to their balance sheet based on their operations, their capital market activities, et cetera, et cetera. And it's become apparent that it's become very apparent with the companies that the amount of capital that the companies have raised in the last 6 months. Billions of dollars, right? Strategy makes a majority of it, but it's very apparent that this is a very lucrative strategy to focus on accumulating more Bitcoin into the future. Now, you think about like a company like Semler or these other Bitcoin treasury companies. I mean, that is the natural evolution, is securitizing different tranches of risk on your corporate balance sheet. I think that's the really big unlock here. The really big unlock is that you've got Bitcoin that you hold on your balance sheet, and you're monetizing the position in your capital stack as collateral. That's what's happening. So you've got different positions in your capital stack. So you've got the most senior position. You can offer a security that's the most senior position on your capital stack with reduced return, but also reduced risk.
Right.
And every company should be offering these types of products to the market, right? There's like tranches of preferred stock or convertible debt. And it's a no-brainer if you're focused on managing the risk of your portfolio, managing the risk of your balance sheet. And I think that's where all of these things start to go.
Yeah. The risk. We're going to come back to that. But we also have these zombie companies, as you call them, I would agree, where either shipped or die kind of a thing.
Yeah.
But now we're also seeing a rapid increase, dozens a day, of companies that are shelf companies that are converting over to build this out specifically. A lot of people, we're a tiny little echo chamber here, but a lot of people think, oh man, this is a bubble. This is euphoria. I see it. I've been here before in the .com era or in the crypto craze or whatever. And so we're seeing now shelf companies just converting over and popping up left and right. And then a lot of people think, are we in a bubble? Is this something that's like going way too fast and is going to explode? Or can the market bear all these?
Yeah, it's a good question. I'm trying to figure it out at the same time. I think, personally, I think the music's playing right now. And the music playing, you dance, right?
Yeah, that's right.
The music's playing, you dance.
Yeah.
And there's just so much opportunity. And you can see it with, all the announcements. We got GameStop, Nakamoto, Metaplanet's going crazy, ASST, CEP, right?
TGB, yeah.
And in all jurisdictions, which is just fascinating to see, and that gives me chills down my spine, right? Because we're seeing Bitcoin now work its way out into all international jurisdictions. So everybody in each one of those jurisdictions has the ability to access Bitcoin-like exposure within their traditional wrapper that they had access to within their market. So it's I think the market can bear a lot of what's going on. That being said, there will be a time when the music stops.
Yeah.
And there will be companies that will be exposed for being over leveraged, and they may have to weather a significant storm that may be difficult to weather. And so
so yes, the music is playing. Yes, as Warren Buffett would say, when the tide goes out, we see you swimming naked. MicroStrategy had to weather that in 2022.
Yeah, right.
And a lot of people kept saying that he's going to get liquidated and all these things. And he built a position where he wasn't, obviously, but we could see what it took to weather that. And so we can start to see, well, these are potential risks. So for example, if your board is not aligned, like that's going to be a big problem.
Yeah.
If it's not a founder-led company with an aligned board in a time like in 2022, like that's going to fall apart. Also, I think if the base of people buying it aren't right, if you bring in a lot of short-term traders, that could be a problem, right? So we can start to spring that up. But I want to go back to how many can the market bear? Because here's kind of how I'm thinking about it. Like, again, back to MicroStrategy or strategy, right? The software is no longer their product.
Right.
The product now is the stock and the three tickers that they have.
Yep.
And when I look at it, like each one of these companies is approaching it a little bit differently. But their stock is also going to be the financial product or the product. And so then I'd ask myself, well, how many financial products can the market bear? Because we have thousands,
right?
Tens of thousands. And if we wanted to look at it almost like sort of like an ETF, because an ETF, basically each ETF sort of creates its own strategy, right? Its own basket. So each one of these is sort of maybe like an ETF. And we try to compare them to things that we know, but we're going somewhere we've never been before.
Right.
But to try to compare it, it's like sort of like a financial product, sort of like an ETF. And like how many ETFs can we have? Well, we could have unlimited.
Unlimited, yeah.
The problem I see is that in the euphoria, we have this first mover advantage. The music's playing. And so like right now, every announcement's they're 300%, 500%, 1400%, like Kindly or Nakamoto. But then if you wanted to launch an ETF today, how do you get attention to that?
Right.
So I think that's one big danger, like the diminishing return sort of thing. But I guess, would you agree with that premise? So maybe the market could bear hundreds or thousands of these types of companies?
Yeah, I think they can. I think the market can, like, long-term sustainably.
Sure.
Yes.
Yeah.
And I think that's where the world is going. I think if you're not adopting a Bitcoin treasury into the future, I think you're going to fail.
You're never going to make it.
I think you're going to fail. And I think we can see a lot of, the traditional financial equity market is just enormous. The fixed income market, enormous. The real estate market, enormous. And there's a ton of monetary premium that is inappropriately allocated from a risk return perspective in those markets. So I think we're going to see capital shift and move and force other companies to enter the fray here. It's, adapt or die sort of situation. So I agree with the premise that, it's each one of these companies has it's like their own risk return profile. And you might want a piece of all of them, right? Like if you think about building out an efficient frontier of assets in a portfolio, you kind of want all of them. right? You kind of want all of the pieces of them. And now you can do it within Bitcoin,
Right.
right? Now you can have a Bitcoin efficient frontier in your portfolio, right? You don't have to have a, USD denominated one. You can have a pure Bitcoin one and take pieces of all of these things. Obviously weighting and allocation is really, scale and allocation is really important, but
yeah. With our fund, with the Bitcoin Opportunity Fund, I mean, we're taking stabs at all these deals coming across right now.
Yeah.
But I see a lot across the market that are like micro caps.
Mm-hmm.
So now you can start to hunt for these like smaller players that have Bitcoin on the balance sheet. Do you sort of dumpster dive through those and look at these smaller companies, or are you sort of only just focused on the big players?
Yeah. It's a good question. It's almost like they're penny stock opportunities, right? And to me, I've been incredibly focused on like the architecture of the equity market. Like, how does this whole thing work? And to me, when I zoom out and I look at the architecture of the entire market, a lot of the inflows that are coming into any equity are a function of the design of the market. It's the passive flows, right? I don't know, 60% of the market is passive flows.
Yeah.
So you're talking pension funds, 401ks, banks, companies that are managing this, IRAs, et cetera. And it's helpful to have scale to be into those passive, index funds, but primarily like the Russell 2000. So there's this idea of like, okay, just get to $1 billion so you can get included in the Russell 2000. And that's like a huge milestone and a huge achievement, because you're going to have passive money coming in the door to buy these equities moving forward into perpetuity. Then it's like, okay, the next goal is, get a little bit higher, get an MSCI index, then get into the S&P 500, and then into the NASDAQ 100. And you can kind of like work these milestones up. And I think every time you get included in each one of these passive flow index ETFs, you're de-risking. And I think there's potential, crazy returns to be made on some of these small ones, but my brain comes back to like the risk return profile of each one of them.
Yeah. Well, I mean, and hopefully smarter people, they always start with the risk. Unfortunately, most retail think about how much I can make.
Yeah, right.
Think about the risk on the downside. Of course, the term hedge fund comes because they hedge their position. But what we're seeing right now is there's a lot of people jumping ship on MSTR. For any number of reasons, one of which, Michael Saylor, people are mad that he's hitting the ATM too hard and diluting the stock. But a lot of it is also, I think it's just gotten so big that it doesn't grow at the same rate as some of the smaller players. And to your point, like it's maybe almost to the S&P 500, right? Like the risk is getting less, but then at the same time, the volatility goes down. And then so there's a lot of traders in there. I guess are you a Bitcoiner?
Yeah.
So then you buy these companies because of the long-term Bitcoin vision.
Yeah, I buy them because of the long-term vision.
You also hold Bitcoin?
Yeah, absolutely.
Okay.
Yeah,
it's like your base layer.
100%.
Okay.
Yeah, that's my just never touching it.
Okay, good.
Yeah, absolutely. Yeah. That was a monumental time for me when I moved Bitcoin to cold storage off an exchange. I was like, oh my God, this is way bigger than I thought this was. Like I walked around the block, with my hardware wallet. And I was like, holy moly, but it was a very like a visceral feeling. Like, oh my God, the money has changed. Money has totally changed. But thinking back to this concept of when I look at strategy, that there's relative to some of these other ones, I think they're in this just a whole nother ballpark. Right. I mean, they've got 50 times more Bitcoin than the Mag 7.
Yeah.
Combined. Right.
Yeah.
You've got Tesla's the only one in the Mag 7 that holds Bitcoin. Right.
Yeah.
And they've got 49 times more the amount of Bitcoin than the entire S&P 500, the top 500 US companies in the world.
Right.
And so if you think of any of these companies start adopting anything remotely close to a Bitcoin treasury strategy, even if they just add Bitcoin to the balance sheet, that pushes strategy further up into the stratosphere. And they've got they're the only ones in the market right now that are offering these preferred, fixed income alternative debt instruments. And they're going to have the highest credit quality forever. And if you're talking about onboarding trillions of dollars of capital into the Bitcoin ecosystem, it's coming from fixed income.
Right.
It's not coming from the equity market. It's going to come from the fixed income market. It's going to come from the real estate market in these wrappers that are more appealing to those types of investors. And because the risk return trade-off is so much higher, so much better, these products that Strategy is offering, the risk adjusted returns on them are monumentally higher than anything else in the fixed income market.
Right.
You can look at like the preferred stock of PG&E, like the utility provider in California provides utilities for 2/3 of the state.
Yep.
Their preferred product is paying like 6.25% interest compared to the Strife product that Strategy provides. It's paying like 10 or 11 as of today.
Right.
Right. And you think about what are the relative risks of each of these, right? PG&E just paid out a $4 billion loss in 2020 from the 2018 wildfires, the Paradise wildfires.
Oh, wow.
Right. There's huge like physical risk, liability, population risk. There are so many risks and that's just one example, right? I just shine a light on PG&E, but
And that's a pretty healthy yield. A lot of the market's much less than that.
right.
The IBMs or the AT&Ts or
Yeah. You can look at the Boeing and some of these other ones and you start to compare them and you zoom out and you look at it. It's like, why would I hold that with all of these risks when I can hold this with digital risk and volatility risk? And I truly believe there's going to be like a landslide movement at some point. It might be 5 years from now where all of this capital is getting reevaluated. Mm-hmm. Like the risk return gets reevaluated.
Let's talk more about the risk.
Yeah.
So this is a good segue because a lot of people think that it is too risky because sure, they don't have wildfire risk or liability risk to your point, but how can he afford to pay that yield in perpetuity?
Mm-hmm.
And how can he continue to do that when MicroStrategy doesn't even have a business and there's no underlying cash flow? Mm-hmm. So there's certainly some risk there.
Yeah, absolutely. My first step is I look at the balance sheet, right? As of today, they're holding $64 billion of Bitcoin on their balance sheet and they have $10 billion worth of debt. Of that $10 billion worth of debt, $5 billion of it is already trading in the money. It's a convertible bond. So really their pro forma debt is like $5 billion. In terms of interest income payable, I think as of right now, it's about maybe $200 million a year, something like that. To put that in perspective, Strategy raised, I don't know, $700 million last week on the ATM of Strike and MSTR. So that they have the ability to raise capital incredibly quickly and fast. I mean, they raised last year in 1 month, I think they raised $17 billion in 1 month. And it's, to me, I see this as this is a pure risk management.
But in a down market, they potentially could lose the ability to raise money so quickly or raise money at all.
Yeah, they could.
And so then what happens?
Yeah, they could delay the dividends payable. That is a function in Strike and Strife. They have the ability to do that.
Like most dividends.
Yeah, but it just is very similar to like you can refinance the debt as well, right? You can, as long as you have a strong balance sheet, you can go get capital. Like you can go refinance your debt.
Even in a bad market.
Even in a bad market,
yeah.
Right? I mean, let's just say the price of Bitcoin fell 50% today, right? Now Strategy has $32 billion of Bitcoin and $10 billion of debt. Would you underwrite a loan for them?
Still seems pretty good to me.
I would still, it looks like they're still incredibly strong.
Yeah.
And I don't think people quite conceptualize that, right? This is a financial strength play, and Strategy is very focused on managing their financial strength. And you think about like, okay, back to this risk. What is the risk, right? The price of Bitcoin would need to go down to $16,000 and stay there for 5 years in order for Strategy even remotely, without even thinking about refinancing it, to remotely be in a position of risk to those holders.
I don't want to spend all our time talking about Strategy, although it's the big dog in the space. And Michael Saylor is sharing that playbook with everybody. So, so it's important to understand that because everyone's running a derivative off of that, if you will. So I don't want to spend all our time talking about it, but I do want to ask one more question about it before we move on. So one big thing that's been happening in the market is proof of reserves. And proof of reserves is, in Bitcoin, we say, don't trust, verify. Mm-hmm. And so there's been a big call for years of exchanges to show their reserves because like with FTX, we found out they didn't have the Bitcoin that they said they did. So people held paper claims. And so there's a lot of uproar after the last couple of days when Saylor took the stage talking about proof of reserves. What's your take on that?
I think the market sentiment is a little bit overblown on the proof of reserves. I mean, me personally, would it be ideal that strategies showed the proof of reserves? Absolutely. Absolutely. I mean, there are other companies that are doing it. Do I think there is some risk of doing it? Absolutely. Do I think it's a risk with Bitcoin and the protocol of Bitcoin? Not at all. It's human risk. It's target risk, right? You have, if those wallets are out, that is showing information. It's just more information that the market has to potentially target some kind of social engineering attack. You also have elements of, I was talking about this with somebody yesterday, of like dusting. Dusting attacks is becoming a thing. Dusting is where you have like corrupt, like old Silk Road Bitcoin that's just being sent to these wallet addresses because they know what they are. And now you just create this nightmare for compliance. Like, who's managing it? Where did it come from? Like, what is this? And you got to figure it out. Additionally, there's elements that the market doesn't quite understand too, right? Let's just say Strategies got all of their capital in 2,000 different wallets, ton of wallets, and the value of the Bitcoin rises. They may want to rebalance all of their portfolios such that they don't have, too much in what they might want to make 4,000, right? As the price of Bitcoin doubles, you might want to be like making more wallets so you don't have too much in any one. And that might be a function of insurance policies that the custodians provide. And all of a sudden you may see FUD in the market of Strategy selling their Bitcoin because they moved it. And it's like, we saw this with the U.S. government, right? Yeah. Like, people were like, oh, the U.S. government sold their Bitcoin. It's like, no, they just moved it.
Well, we don't know that.
We don't know that.
but I know what you're saying.
You know what I mean?
Yeah.
So like,
the way I look at it also is that certainly don't trust verify, but I think it could potentially give a lot of false hope because number one, it's an equity.
Yeah.
Not immutable, right? Like,
right.
It's there's counterparty risk.
Yep.
It could be revoked.
Right.
Whatever. Number one. Number two, to your point about the capital stack, just because I see that there's Bitcoin there doesn't mean I have a claim to it.
Right.
Where am I in the stack?
Right.
Right. So I don't know how encumbered that could be. Right. We have no idea. Yeah. Even with an exchange, if an exchange shows me a proof of reserve, I don't know what encumbrance that might have. So it sort of then leads to a false sense of security.
Right.
And then I almost think like if people are really depending on that, there's the ethos and the ideology and like, do I want to be aligned with that? I guess. But then at the same time, like I said, it's like a false belief. And if people are really hanging it on that, maybe they're not understanding the way equities work and the market works.
Right. Yeah. You don't know the liabilities. You don't know the liability side of it, right? Just because somebody shows proof of reserves, I mean, they could be leveraged 90% of the portfolio and you have no idea. Yeah. Right? So like, it's a much bigger focus on the liability side of things. Also, right, all of these companies have audits, annual audits.
Yeah.
Right. Do you really think that all of the executive staff and the auditor want to go to jail?
And everyone would say, but Enron.
Yeah.
But Enron.
Right. Yeah. But Enron. I mean, the world's changed since Enron.
A nuclear bomb dropped once before too.
Yeah. Right. It's like, it's black swan, right? To me, it's binary.
Right.
They have the Bitcoin or they don't. If they don't, the entire market is screwed.
Yeah.
at least for an extended period of time.
Yeah. All right, let's move on past MicroStrategy. So we're seeing companies popping up left and right. Like I said, 300%, 500%, 1500% overnight. Amazing returns. The music's dancing. We're dancing, right? But what would you say when you're looking at these new companies? Well, I guess number one, are you looking at the new companies?
Yeah, absolutely.
And then number two, well, let's start with if you were to, let's start with the risk. What do you think the biggest risks are what are the red flags that you would see glaring? There's a lot of unknowns we don't know yet because it's evolving so quickly. But from what you do see and what you do know, if you saw a company doing these couple of things, what would be red flags for you?
Secured debt.
Okay. So
debt secured by the Bitcoin.
Instead of the stock.
Yeah, right. Instead of being unsecured, right? Or effectively any debt structure being collateralized by the Bitcoin. And my concern with that is the traditional financial market is so much bigger, vastly larger than the Bitcoin market at the moment. The incentives are not aligned, right? So if somebody's offering these debt instruments that maybe they're decent terms, maybe you're able to get, generate $250 million more of capital, which is great. My concern is the provider of that debt calls up his TradFi buddies at any point of weakness and says, hey, let's bury these guys.
And that's what happens.
Let's bury these guys. Yeah. And then at that point, if they start getting buried, you may lose sentiment in like retail traders and have no liquidity going back up. You have no liquidity there to backstop it. And the traditional financial market, again, is so much bigger. They could do that for an extended period of time. I mean, we've seen it with these like targeted short interests on a lot of these stocks, like Walgreens.
We'll go back to GameStop.
The same thing. They
started.
They could be there longer than you, and they're bigger than you, and
they will get more billions from their buddies.
They're stronger than you. They're bigger than you, and that's kind of my concern in the market, is that the incentives aren't aligned for the secured debt instruments at the moment. And there could be a situation where because the convertible bond seller may look at like that as an opportunity. Like, oh, I could go get Bitcoin at a discount.
Right.
I go bury this company and I go get Bitcoin at a discount. And so that's one of the like most glaring risks I'm kind of looking at right now. It's just like the structure of the leverage. Like, how are you getting leverage? Where does it come from? And I think there are ways to do it that may be less existential risky than others.
Okay, that's good.
Yeah.
So then let's talk about the converse of that. So if you were going to imagine the best company starting today, how would they do it?
Yeah, I've been trying to think about this as well. And really, I think having an operating company that has income coming in from a diversified stream is really important. Because that
hasn't been important for Metaplanet.
Hasn't been important for Metaplanet. I mean, they're generating an income stream right now. They're doing it right now by selling cash secured puts.
Yeah.
So that is a revenue stream for them. But Metaplanet also hasn't weathered a storm yet. Right. So I think that having that operating cash flow will be incredibly important for
to cover the debt service in a downturn.
Yeah, cover debt service, but also have a sentiment boost. Right. It's like a sentiment booster.
Right.
If Bitcoin goes down 50% and you're like, oh, this little tiny company is still buying, tons of Bitcoin and everybody else is paused.
Yeah.
That might be incredibly attractive. You're like, wow, this is they're accumulating faster than anybody else right now because they have this other diversified cash flow. So diversified cash, managed leverage, being prepared to weather a storm. I think a storm is coming at some point in the future.
For sure.
So that's kind of what I'm focused on. And then the ability to, what I think is really cool here and unique is this, because of strategy has grown so fast and so big, and they're so consistent and transparent about what they're doing. They don't want to go chase any weird capital pools. They are laser focused on the fixed income market,
right?
And incredibly transparent about it. Now, that provides opportunity for these other players in the field to go tap different alternative capital pools that may be just unique and weird and different, right? I mean, like what Strive is doing and looking at buying distressed biotech companies for less than net cash. And basically getting Bitcoin at a discount by doing that, and then holding the IP that comes along with it to bunch it up and sell it to big biotechs when the market shifts and moves around. And there are thousands of opportunities like that. And for me, I'm thinking about that in the insurance space. Like the insurance space is so archaic and old. Like that's a huge untapped market that I've got my eyes pretty focused on to go identify opportunity over there. So. That's, I think, going to lead to the most success with these Bitcoin treasury companies is like identifying unique pools of capital that need it.
I sat down with Grant Cardone yesterday, and he has maybe one of the best ones that I've seen right now. And I mean, obviously he's a real estate developer, And now he's building real estate projects that will be paired with Bitcoin strategies.
Amazing.
So you have in the United States 30-year debt. No one else in the world has that.
Yeah.
And most of the real estate debt is somewhat, you could say, subsidized by the government at super low rates. So I get super cheap debt, termed out, super far. But then in the U.S. we have tax write-offs from the depreciation from the real estate. So then I get the tax depreciation from that. Then I have tenants that pay that for me, and that goes up with inflation. And then he takes that, so you have basically a no volatility asset.
Yep.
And then all the cash flows from that go into Bitcoin.
Yeah.
So you have a super cheap subsidized long-term money with no volatility paired with a high volatility asset like Bitcoin. And his goal is to, I think he said, build up 9 or 12 of these, bundle them together, and then launch that as a publicly traded Bitcoin treasury strategy company.
Yeah. It's a no-brainer. Yeah.
And so it's like, that's like one idea of like a whole subset of pools of capital.
Oh yeah. I mean, private equity, there's very similar opportunities in the private equity market. Just like throw a Bitcoin kicker on anything.
Yeah.
Like
coming for all.
Any transaction that's made, you just throw a Bitcoin kicker on it, 5-10%. And it's like, okay, well, that whole transaction changes. And it could be a duration asset. Real estate is very clear that's an opportunity.
Just because of the long-term cheap money and no volatility, right? It's a good addition. All right. So what do you think Bitcoin and Bitcoin treasury strategy companies are in 5 years?
Yeah. Okay. So 5 years from now, so we're talking 2030. 2030, I think Bitcoin is a $6 to $7 trillion asset. And I think these Bitcoin treasury companies I think there's going to be at least 1,000 of them. And yeah, I think they're all going to be continuing to shift this way. I think the U.S. government is going to hold a significant amount of Bitcoin. I think nation states are going to hold a significant amount of Bitcoin. And we'll see some of the larger companies have a cost basis of over $1 million per Bitcoin. And I don't think they'll take it seriously until then.
So you think Bitcoin could be up, I guess that's 3 to 4 times. And do you think some of these treasury strategy companies will be 2, 3, 4 times Bitcoin's most price?
Yeah. I mean, I think they're going to move faster, right? Because what is an equity? An equity is a forward-looking view. So how far into the future do we look?
Right.
And if we think Bitcoin is the strongest asset on the planet, and then these companies have X amount of Bitcoin, X% of the network, they should be priced as such.
Yeah.
And so how far in the forward do you look? And how far forward do you look? And like NVIDIA is 10 years forward looking.
Yeah.
If you start looking 10 years forward looking, like, is Strategy a $5-10 trillion company? Maybe.
Yeah.
Right. Are these other companies, hundreds of $1 billion companies? Absolutely. And they're going to have the ability to eat and consume other companies that are distressed because they don't have Bitcoin on their balance sheet and they got no strength, no liquidity. And they're going to be able to absorb a lot of these companies, I think.
Yeah. Cool. All right. Anything you want to shout out, bring attention to? We'll link to your, Twitter profiles down below.
Yeah. No, I've got a crew. We've got a show called MSTR True North, or just True North. And we talk every Wednesday about what's going on with strategy, what's going on with Bitcoin treasury companies, the evolution of these financial products, securitization of Bitcoin, how the market's changing and evolving. And my Twitter is @HunterJeff, and my Twitter X handle is @HunterJeff. I post a lot of research and analytics on the space and what I'm thinking. Every now and then I'll do 30-minute to an hour long just live show, and I'll just talk about everything that I'm going through and my thought process on what's going on in the market.
Yeah, cool. All right, thanks so much.
Appreciate it.